Verizon added fewer customers than expected in its TV and internet businesses. Shares of Kraft Foods rising after the food maker's second quarter earnings rose more than analyst estimates. That was helped by both higher prices and the dollar's decline. Kraft said earnings rose 3.5% to 48 cents a share. Sales were up 21%. Kraft also raised its full-year profit forecast. And leveraged buyout firm KKR plans to convert to a public company by the end of the year. KKR is abandoning its original plan for an initial public offering. Instead, it will go public through a takeover of the Amsterdam-listed buyout fund it created in May 2006. When the acquisition is completed in December, shares will then trade on the New York Stock Exchange. For more now on KKR's plans, we're going to turn to Thomas Atterbury of First Pacific Advisors, and we're also joined now by Ben Phillips, Managing Director of Strategic Analysis at Jefferies Putnam Level. Ben, thanks so much for coming in today.
No problem. Thanks.
And we're trying to figure out this deal because the timing of it, I guess, is very intriguing. KKR obviously put off going public in the past, but why would you do this now?
Well, the question, if you flip it around, is why not do it now? I mean, in the short term, it's more story about KPE, which is the Amsterdam vehicle, than KKR. It's a vote of confidence for the permanent capital fund in Amsterdam. So it bolsters that, and you can see the reaction on the exchange today. In the long term, what it does is it gives KKR the ability to have a publicly traded currency, and that's critical for attracting asset management talent. But in a way that gives them more of their own terms of how it takes place. So by using the reverse into the permanent capital vehicle, similar to what GLG did last year, they are able to control their valuation a little bit more. They already have a built-in book of investors that they can sell into, and this allows them to get the currency without some of the unknown variables of a full-out float on the New York Exchange. So there's a lot of speculations as calling a bottom. I think it's less than calling a bottom than it is KKR saying we have a long-term strategic plan. We need this currency. We also need to do something about KPE. This is an elegant way to do it all at once.
Elegant's an interesting way to describe it.
Well, elegance in the eye of the beholder, true. But,
well, let's talk a little bit about that. Look at the Blackstone IPO. If you look at how that IPO has fallen, why would investors look at this IPO and think differently?
Well, again, because it's a reverse, their investors are kind of caught. They can hold the stock that's already shrunk in the KP exchange, or take a bet that by adding in part of the KKR general partnership that it'll rise in value over time. So it's a little bit less vulnerable than the Blackstone, which was a full-out float. So that's the first thing. But I think there's been a lot of comparison to Blackstone, and actually the more relevant comparison may be BlackRock, because over time, KKR wants to become a diversified asset manager. It's recruited William Sonneborn from TCW. It's done a lot of things internally to prepare for not just buyout funds, the plain vanilla asset management that everybody used to think was boring in the bull market, but right now the street wants to see because of the earnings. It reduces the volatility in those buyout fund exits. So looking into the long term, what they're saying is it's less about looking at what happened with Blackstone and more about we're going to need some sort of public currency to keep people on board, to keep the younger generation here. And so in the long term, they're thinking more strategically than about what's going to be the value in the next 6 months.
I'm curious to spend a minute on the public currency to retain and attract talent. When you look at what's going on with other public financial institutions, whether it's a Lehman Brothers or whether it's, in the worst case of scenarios, Bear Stearns, why the perceived value to that piece of the transaction and why you couldn't do it in a private partnership form and still accomplish the same objective, which is that piece of ownership or that sense of ownership by individuals that you want to reward within an organization.
No, it's a very good point. Apollo, which is in the same boat, has pursued through a 144A private placement similar liquidity, sort of in the precursor to an IPO, maybe, but maybe not. I think in this case, the publicly traded currency has a degree of liquidity. So for a broader, younger set, they know that they can, after restrictions end, have a market in which they can trade their way out. It certainly gives the older partners liquidity up front, which will be key. But the one thing we have to remember is we've all watched financial stocks get battered over the past 6 months to a year. But the asset management stocks have they still remain about twice the value that they were about 5 years ago. The rest of the financial sector is either matching it or below it. So, again, if KKR can define itself as a global diversified...
That's something you don't hear very much.
I didn't say it was AM or PM.
Right. Ben Phillips, we want to thank you for coming by. I appreciate your expertise on this story. It's been an interesting one. So, again...